Bharat. He says that he wants to buy Gujarat State Petro at current price for the longer term. He already has some shares which he's purchased at 309 rupees per share. So he wants to know whether it's good time to accumulate Gujarat State Petro. Kunal, what's your take? Does it make sense for Bharat to go and add on to more shares of Gujarat State Petro at current market price?
Well, I would say not to be in a hurry as such. Wait and watch, because I think the stock is just started a corrective phase. I think from 340 levels, it's corrected back towards 307, 308, where it's currently trading. And it's been, I think, 5th or 6th trading sessions on a trot, where you're seeing some of the marginal pressure coming into the stock price. Last time when you had a very similar kind of a correction for Gujarat State Petro, the stock corrected from 300 levels to almost 245, 250. I think that was 3-4 months back, if I'm not wrong. So I think if that's the case, then maybe some more wait is what I would suggest. Let the stock complete its corrective phase. That could probably happen if the stock maybe comes back towards 275, 280 levels. So not to hurry, and I think closer to 275, 280 is where I believe a possible correction for Gujarat State Petro could end, and that could probably be a good opportunity to try and average out further.
All right, now we've got Sagar asking a multiple choice question, and I must point out, Ashish, you don't have to feel obliged to speak about all of the options that he has provided. What he's saying is that he's got a couple of stocks in the realty space, Godrej Properties and Brigade Enterprises, and he's thinking of adding another stock. And the names that he has mentioned are Nesco, Phoenix Mills, Soba, and Oberoi Realty. Which out of those stocks that he has mentioned would you add to your portfolio if you were to add one more?
He already has Godrej Properties and Brigade Enterprises. I don't see why he should be looking at adding the other players. He talking about Phoenix Mills, and I did not get the other name. Sorry, can you come again?
Names that I just mentioned right now, you don't need to speak about all. You can speak about one: Nesco, Phoenix Mills, Soba, Oberoi Realty. And I must point out that Sagar has a very well diversified portfolio. I think he's looking to diversify further.
Okay, fine. I think, see, as it is, Godrej Properties would be the best choice here. He already has it. Brigade Enterprises is another good one. And if he really wants to add another one more, then it should be Soba Developers. I think that should really make up a very good bouquet of real estate stocks. And I think that real estate itself, I think, has been lying low for quite some time. So yes, it's a good idea to have a bouquet of real estate stocks, and I think Godrej Properties, Soba, and Brigade would be a very good portfolio to have.
All right, this one also is a realty-based question, and according to Ashish, it makes sense to have Godrej Properties, Brigade, or Soba in your portfolio when it comes to realty. But Mr. Balan also has 200 shares of Brigade Enterprises, which he's purchased at 275 rupees per share. He wants to know whether he should continue to hold, switch, or add another realty counter. And the choice that he's given is India Bulls Real Estate. Kunal, this one is for you. Does it make sense for Mr. Balan to move out of Brigade and look to invest in India Bulls Real Estate?
Well, I would suggest that rather than making a switch, I think why not have an add-on to your portfolio. So both these stocks are completely different in terms of the characteristics. For example, Brigade Enterprise has been one of the few stocks which has been very steady mover. The stock was almost 100 rupees from the March 2020 lows, and now it's 3x from those kind of levels. And it's rallied in a very gradual kind of a fashion, breaking out of multi-year highs, multi-month highs on a consistent basis. India Bulls Real Estate, on the other hand, is a very high beta name, and you've seen that the stock is still not broken past about their long-term resistances. So there's a lot of traction which could be achieved for India Bulls Real Estate. The only catch with this name is the high beta nature. So I think if you can digest that kind of volatility, because the stock can swing 10, 15, 20% in a matter of couple of days. So if you're okay with or comfortable with that kind of a volatility, then I would suggest maybe adding India Bulls Real Estate. And if you're doing so, I don't believe that you could probably look at selling your investments on Brigade, and chipping up to a stock like India Bulls Real Estate. Might as well look at an add-on, specifically if looking at real estate picks.
Question for you, Kunal. Do you have coverage on EPL Limited? Stock is currently trading at 274 or thereabouts. We've got Venkat who's bought at 230 levels, and so therefore he's asking whether he should hold or sell.
You should look out to book profits over here. The stock is in a bit of a, I would say, resistance zone. 275, 285 has been the previous high for EPL as well. I think if I'm not wrong, January 2021, just 5-6 months back was where the stock had made a high, there, and then from there it corrected back towards 200 level. So this seems to be a resistance zone for EPL, and if you bought at much lower levels, then specifically if it's from a trading view, then I would suggest that you can book out profits over here and maybe wait for one more round of correction. You may probably not get an exact 200 kind of corrections, if the stock price trend is strong. But I think closer to 240, 250, if you happen to get the stock back, then I believe it could make a good sense to try and chip in further. So I would suggest an exit over here and then rebuy if the stock comes back to 240 to 50 zone.
Okay, this query is coming in from Kunal Kaushik. He wants to know till what level can we expect the Tata Motors to fall from here. He already has 400 shares of Tata Motors, which he's purchased at a price at an average price of 224 rupees per share. At what price should he actually look to add more of Tata Motors? Kunal, prudent to wait for some more correction in Tata Motors if you were to add it in your portfolio?
In fact, we were discussing this stock yesterday, if you remember, Cheryl, and I mentioned that you should not be in a hurry to try and jump onto the stock just because it's available some 10-15% lower from its previous major swing highs. Typically these kind of sharp corrections, they tend to have an effect into stock prices for at least a couple of months, if not more, and that depends on the kind of successive news flow which comes around into the stock. So I think purely on that sense, I would suggest a wait and not to hurry up to try and buy the stock. Typically, I believe the previous support generally gets tested in stocks where you see such kind of a negative news flow and a corrective phase which comes across all of a sudden. So if that happens, you could probably be looking at the stock coming back towards 280, 275 level. So I think a much better bet could be to try and wait for the stock to come back, settle out at the 275, 280 band. I think that could be a better strategy rather than entering at current levels, which I believe could be a bit premature.
The banking space, Ashish, coming to you on this one. Rajan is holding 200 shares of RBL Bank that he bought at 245 levels, and he's been holding for the past year. He's asking what the future outlook is. Should he just book and move to another counter, or should he hold on for if there's a hope for better prospects going forward?
Well, there's certainly hope. I think with the economy likely to now start picking up, there is great hope that the smaller banks will also now start doing well. And RBL in good times used to trade as high as 600 rupees. So after having fallen so rapidly during the lockdown phase, I think there is scope to really go up. It is a little riskier bet than the larger banks. Now, if he is a very safe, he wants to play very safe and he doesn't want too much of let's say risk or volatility in his portfolio, then yes, maybe ICICI Bank could be the very good bet to go on. But ICICI Bank would certainly be safe and a kind of a short bet from the current levels. But however, if he is looking at something which has some upheavals on the way, but eventually a much higher level, then I think RBL Bank itself is a good idea. It really depends on what kind of profile he has and what kind of a risk he's ready to tolerate.
Coming in from Divya, and she wants to know what's the correct price to look to invest in Indian hotels for a time period of about 5 years. So she wants to know whether this current market price makes sense to invest into Indian hotels, or should she look for some correction to come into the counter before investing for the longer term. Kunal, what's your take coming in on Indian hotels?
You can start buying at current levels, and then let's hope that there is a correction along the way for stocks like Indian hotels. I see it a bit rare that the stock would go through a sharpish kind of a correction. Even the last 4-5 months where the stock has rallied from 90-95 levels to 150 plus, this is a very strong recovery. So we are talking of almost a 50% to 60% return in a stock which is extremely low beta in nature, and I think that's a strong kind of a return. It also indicates that a new wave of an uptrend has probably hit back into the stock. So the longer term trend seems to be very strong, evolving quite well for Indian hotels. The volatility is also a bit low, so probably because of that, you might not see a major correction coming by. The only question is about patience. So the stock has a tendency of going through very a prolonged phases of dull price action. So if you are okay with that, and I believe then it makes sense to try and start buying Indian hotels at current levels, and then hope that maybe along the way when the stock goes through a time wise correction, you also get the stock a bit more cheaper than the current level. So I would suggest a buy starting at current levels itself.
Okay, Ashish, I would completely understand if you don't have coverage on this, but then perhaps you can give some advice nonetheless. We've got Sudeep, who's got Taj GVK, and I'm asking because it's again in taking the hospitality theme forward. We just spoke about Indian hotels. He's got Taj GVK at levels of 176. It is currently trading at 137 or thereabouts. He's asking we should hold or should he move to something else?
Well, I think he should move into Indian hotels. The Taj GVK would be just one property. Indian hotels would give him a bouquet of very large and diversified properties. Also, Indian hotels, is a stock which I have been holding for quite some time. I bought more last year, was able to buy more at very low levels. I think Indian hotels is a great bet on the opening up trade, as well as a great long-term story, because the model which they have now developed is very super capital efficient and capital preservative. They are going through the franchisee route, and the kind of brand and the kind of management they have, it can easily scale up a lot. So I'm extremely bullish on Indian hotels prospects from a long-term perspective, and immediately also it's going to do very well because of the opening up trade playing out. So I would recommend him to shift from Taj GVK into Indian hotels. You'll get a much better bouquet of properties, as well as a much better management and a far superior business model.
Okay, this one is coming in from Padma. She wants to buy Kesaram Industries and Finolex Industries at current levels for trading. Kunal, either of the stock, what's your view coming in, Kesaram Industries or Finolex Industries?
I think both these stocks, Kesaram Industries as well as Finolex Industries, they're looking quite strong. They are into a very subtle kind of an uptrend. Time and again, you see these stocks moving up higher and going through a more of a prolonged pause in between. So that's structurally very well, because these stocks are not, I would say, prone towards high degree of volatility. Again, because of the time correction, the averages, they tend to naturally come up higher and complete the process of mean reversion as well, quite aptly for these kind of names. So both these stocks are attractive. Specifically for Kesaram Industries, I believe that there could be a slight better edge because of the slight consistency in volumes and the recent breakout the stock has shown after a very similar kind of a time correction. So I think that's a better name at current levels of 93, 94 for a target of at least 110, 107 in the very near term.
Okay, this next question is a bit of a tricky question. Shushrit is asking, he's got a couple of recent listings that he's subscribed to and he's got allocation. Lucky, Shushrit, that you did, considering the kind of retail demand that there was. KIMS is one of the companies that he's talking about, and he's already got 36 to 37% profit in a couple of these names. Ashish, the question that he's asking is, should he book profit or should he hold for the long term? And I think that's a question for the ages, right? It depends on your outlook. It depends on how long you want to hold the stock. But specifically on the basis of how some of these stocks have behaved immediately post IPO, and then when the dust settles, they're available at a cheaper price. Should that be the strategy? Book profits and then come back later?
Well, again, depends. I mean, like if he is a trader, then he could try and do that. But most of the investors are really not able to time it like that, and there is no certainty that the stock will actually behave like that and will come down. I think overall, the medical sector is likely to do very well and see a lot of traction post COVID pandemic. And the company in question, the valuations are high, certainly very high after at the current price. But the question is that, given the kind of traction and the kind of potential which we are seeing in this sector, possibly, you would get a much better rate going forward. So I think you should continue to hold on to it.
Query is coming for Kunal, and this one is from Suman. He's saying that he's a big fan of yours, Kunal. He wants to know what is a good price to buy Oracle Financials with a 3 to 6 month view.
Thank you so much for that. And I think for Oracle Finance, I think it's a breakout candidate. Again, the IT enabled services stocks have done phenomenally well. So is the case with Oracle Finance as well, from 1500 to 3800 in the last 14-15 months. And again, I think at current levels, the stock looks set for maybe some sort of a continuation rally. If you're in from a short-term view, then I would look at maybe a 4,400-ish, 4,500-ish, which is the previous major high for Oracle Finance as an immediate target range. So would suggest a buy at current levels for a target of 4,400-ish, 500-ish on Oracle Finance.
Okay, Mayank Saraf is a viewer that I've been acquainted with for quite a while, Ashish, and he is a firm believer in buying holding companies. So he looks out for them. He has been holding Maharashtra Scooter for quite a while. In fact, he's holding 2,000 shares at an average price of 1,500 rupees, and he's saying that it's still available at a big discount to the underlying asset. He's wondering whether he should add more for the long term. What do you have to say about that?
Well, I really haven't tracked this particular stock in detail, but what I can say is that the holding company discount is something which generally holds out, and usually you find these companies are always available at a very reasonable valuation, but that's tends to be a kind of a value trap, and usually gets released only at a very particular small fraction of time when there's a huge frenzy in a bull market. So if you're really an investor in these kind of stocks, you really have to be very patient, hold on. You do get an exit at a good rate, but the holding tends to be pretty long and pretty testing your patience. So generally speaking, I personally don't like the idea of holding companies because of the way they trade and the kind of time it takes to realize the value.
It's coming in from Sangeeta saying that she's holding about 150 shares of Reliance Industries at an average price of 2,153 rupees per share. She's asking how is the chart looking for the shorter term for Reliance Industries? Can she continue to hold on to the counter or should she look to exit? Kunal, what's your view on Reliance Industries? How are the charts looking for the shorter term?
So I think the short-term charts are looking a bit more sideways, consolidative for Reliance Industries. The correction which started off for the stock, just around the AGM, I think post that we've seen the stock just about laying a bit listless. 2,100 approximately has been now the pivot support for Reliance Industries. So it tends to move up just a couple of percentage points high, like 40-50 points, plus or minus the 2,100 band in the last 1-2 weeks post the AGM. So I think that's been one of the reasons why the stock has been more sideways as such. And I believe that short term wise, it could remain in this sideways range. And also I think we have to look at it in the market circumstance as well, that the current market circumstances as well for the indices are in a consolidation. So it's difficult to expect that within a consolidation going on from the indices, that such kind of names would lead the breakout. So I think from a short term view, it could make sense that if you buy the stock only if it gets back into the thick of momentum, which I think could probably happen if the stock breaks above the 2,200 mark. Until then, I believe the stock can remain more sideways.
Okay, coming back to you, Kunal, on this next one, we've got a question on Cipla from Yash. He's got at levels of 971.25. Should he hold or sell?
Well, I would suggest to, if it's a very short-term oriented query, then I believe that you can look to exit the stock at current levels. I don't see any major momentum into the stock. So, what has been happening is that many of these pharma stocks, they've taken a bit of a backseat in the last few days and few weeks. It's got to do more with stock specific actions. So, for example, at a time when Cipla has been consolidating in this 940, 950, 940, 950 support and 975, 985 resistance, you have other stocks like Dr. Reddy and DV Slab, etc., which are looking quite strong, and these stocks have given a continuation breakout. So purely on Cipla, if it's a stock specific and a very short term oriented query, I would suggest an exit and maybe relook at the stock if you get the stock back at that 900 mark. So no need to hurry as such. And if you're looking to maybe chip into some other pharma name, then maybe look at Dr. Reddy or DV Slab at current levels.
Coming from Shashwati, wants the view on PNB Housing Finance. She's already holding 100 shares at an average price of 538 rupees per share. For this one, I'll come to you, Ashish. How is PNB Housing Finance looking? Does it make sense for someone to be invested in this company for the longer term?
Yeah, it certainly makes sense to be invested in the longer term because the kind of shareholding which change which has happened, and despite some of the controversy surrounding it, I think eventually it will go through. So I think Carlyle Group, along with Mr. Aditya Puri at the helm of affairs, would certainly be very good news going forward. And I think the scope in housing finance here in this country is huge. There's still a sector which is at a very nascent stage. So this stock certainly looks, despite the run-up, looks fairly good from a long-term perspective.
Okay, we've got a question from, this is from Akash Raj, and he's wondering about Trident. He points out that he's just booked profit in Renuka Sugars. I think it was on your recommendation, Kunal, and he thanks you for that. He's asking whether he should get Trident at the current level.
You can look to buy Trident at current levels. I think it's an interesting play. In fact, the entire sector, I've been tracking this sector quite closely, and the entire sector looks very attractive. We've seen very strong and renewed momentum into many of these stocks, which are peers of Trident. And I think post that as well, I would expect a stronger move for the stock even at current levels. So I think if I'm not wrong, it's placed at 17 or 17 and a half kind of levels. And I think even from a slightly medium term view, because of the 3-month, 4-month breakout, the stock has shown on the charts, I believe that the prospects over the next couple of months could be a bit better. But then remember that in a market which is more sideways, in a market which is in a consolidation phase, these kind of mid cap names, they tend to have a tendency of giving you short term quick momentum on the upside. So if you can try and take benefit of that, if it happens along the way, then I believe it could be a better strategy. So don't look to invest as such, but I believe from a trading perspective, you can look at a stock like Trident.
Alright, this one is coming from Muthu Palani, and he wants a view on Mass Financial Services for the longer term. But how are the charts looking for this counter? Kunal, could you take us through? Mass Financial isn't attractive if someone wants to invest in at current market price. Does it make sense?
It's an absolutely dull chart, Cheryl. The last 6-7 months, particularly, the stock has been very, very sideways. In fact, at current levels as well, it's been just hovering around the 200-day moving average, the 50-day moving average, without any pickup of trends. The volumes are also very dry for this counter. So priced at 850 odd rupees. For example, today the volumes are just at 5,000, 5,500. So maybe that could be one of the reasons why the stock is remaining sideways, because of the lack of participation. So it's going to be a bit tricky, because if you try and add up to many of these low liquid or a bit illiquid stocks in your portfolio, then I think it could be a bit tricky, because if the market happens to go through any kind of a sideways phase for a long period of time, or maybe a correction as well, these are the kind of stocks which can go through a sharper corrective phase. So I would suggest an avoid on Mass Financial.
Okay, coming back to you, and this is probably one of the last questions that we will take. Arun is asking about MSTC, which he bought at 333 levels in February. In fact, let me just get that on the chart. I'm instead going to take a question from Neeraj on Tata Motors. I know we discussed it in the near term, but Ashish, on the long term prospects, if a viewer is got at levels that are close to the current market price, should they hold on for 2 to 3 years?
In my opinion, certainly hold on for 2-3 years, because I see a lot of movements, favorable movements happening for this company. There is, of course, the entire EV story, which is just about starting to play out. Then within Tata Motors, there is, of course, the global recovery story, which will be played through their the Jaguar Land Rover the segment. Then there is the commercial vehicle recovery story, which is, of course, they have a very strong presence in the CV market here in India. And also not to kind of ignore the passenger car market, in which they are getting very good traction now. So overall, I think Tata Motors, it looks very good. I think one of the more promising large cap stories going forward. So with a 2 to 3 year kind of perspective, I think there's a huge potential on the upside. So certainly stay invested.
This one is the last query that we are taking. This one is from Arun Jawar. He's saying he's purchased MSTC at the price of 333 rupees per share in February. He wants to know what to do, what sort of a target should he look at, until what time frame should he actually hold on to MSTC. Kunal, what's your view coming in on this counter?
Well, just recently coming out of a breakout, I think 255, 265 was the previous support for MSTC, and the resistance band for the stock was around this 285, 290 mark. And I think it's very recently, last 3 days or 4 days back, is where you've seen a breakout for MSTC. So I think a much better trade or an averaging opportunity could have been closer to that 285 to 90 mark for MSTC. Now the stock at current levels of 315, 318, I think looks attractive for maybe another 10 to 15 rupees on the upside. So I would expect a 340, 335 to 340 kind of a target range for the stock price in the near term. So I think a better play could be to try and average if the stock happens to come back to that kind of a breakout level, and then hold on to it for a target potential of 335 to 340 from a very near term view.
Alright, I do want to point out to all the viewers that are tuning in that didn't get your queries answered. I know that there is a bit of disappointment, but it's impossible based on the time that we have to take everybody's query. The hope is that at some point we will be able to address your query, and in the meanwhile you will benefit from the queries that we do manage to take on the show. On that note, let me go across to you, Kunal, first for your high risk and low risk ideas.
So Alex, two buy calls and specifically on the mid cap names. The first one is about NAM India, Nippon Asset Management. Many of these asset management stocks are seeing a good pickup of momentum yet again. NAM India has given a breakout on the daily charts about this 375, 377 mark. So keeping that as a stop loss of 375, would suggest a buy on NAM India for a target of 425. And the second would be from the high beta pocket. It's a buy on NCC. Many of these infra stocks are making a comeback. Many of these stocks are hitting back their previous major swing highs. NCC as well is a stock poised in a very similar manner. The stock inching towards an Ichimoku pattern breakout on the weekly and the monthly time frames. So I believe if the infra rally continues for some more time, you might see many of these stocks like NCC heading towards more of a bigger breakout on the weekly as well as on the monthly charts. So would suggest a buy with a target potential closer to 100, stop us at 86.
Alright, Ashish, what are your high risk and low risk ideas for the viewers?
And the high risk idea is L&T Finance, not the best of companies in the NBFC space, but certainly available at a very good valuation. And I think going forward, there could be many triggers, including possible monetization of the AMC business. Also, return ratios could very likely to improve going forward. Company has a comfortable liquidity and a comfortable capital reserve ratio position. So current valuation does give a lot of comfort. Again, like I said, the space is very high beta, and L&T Finance, for whatever reason, has not been able to do as well as it was expected to do in the past. But if somebody is willing to take a chance, then with some risk, this can give you a very good return in the coming few months. We have a target here of 150. So if somebody with a bit of risk-taking capacity can certainly look for a very good upside potential here. The low risk idea, which is I think no brainer at this price, is HDFC Limited. The stock has done nothing for a couple of months. It's been consolidating around the current levels. The company is a clear leader, and like I mentioned earlier, housing finance is a space where there's a huge potential going forward. The traction is likely to continue increasing. The company has very comfortable return ratios, has a very strong balance sheet, is the clear leader, has always over a period of time created great wealth for the shareholders. So there is actually nothing to really worry. It also has a very healthy AUM growth, and which is likely to increase further going forward. So from all parameters, this looks a very safe place to put your money in. And having underperformed for the last couple of months, I think it's due for a rally. Difficult to time it, but a good opportunity to buy for long-term investors here. Disclosure here that both these stocks I would have recommended to my clients, so myself and my clients would be having holding in them.
All right. Thank you so much, Ashish, as well as Kunal, for taking the time. Thank you so much to the viewers who gave us their time. We hope that we'll answer a lot more questions tomorrow. We're slipping into a short break, but more on the other side. Do stay tuned.